everyone. This is Kevin Davey. Thanks for joining me today. We're going to get started in a minute or so. There's some people still coming in. So I just want to make sure you guys can all hear me. If you can hear me and see me, just type a quick yes. Perfect. Thanks, William, Derek, Stephen, Xavier, Wayne, everybody else who's answering yes. And just in case you hear some outside noises from my microphone, some banging or some saws, there's actually construction work going on next door to me. And literally there is a guy about 5 feet from my window in a cherry picker. And I could actually show you. Well, here, I'll show you guys. If you guys can see him there. Can you guys see that okay? Chris says no. Oh, the white balance blasted it out. Oh, sorry about that. Let me try it again. Just see if that, does it kind of show up now? Nope. Oh well. Oh well, sorry about that. It's the light inside versus outside's kind of messing it up. So anyways, in case you hear those noises, that's what it is. But all right, well, let's get started. Today what I want to talk about are some entries that actually are working in today's market. So I think you'll find it pretty useful here. And that's the primary thing we're going to talk about. And if you're listening live, or if you registered for this webinar and couldn't make it live and you're listening to a replay, or if you were locked out because we're very close to capacity, you'll be able to hear the whole webinar, which includes questions and answers. And only the live people can participate in the autographed book giveaway, which I'll be doing at the end. And then there's also a special surprise at the end. And anyone who signed up for the webinar can do that. The reason I say that is because we're going to have YouTube viewers, because I'm going to put it on YouTube. And unfortunately for the YouTubers, they are sad because they do not get access to the Q&A and the special offer. So, if you're watching this on YouTube at a later date, hey, just go to my website, sign up for my free book, and then you'll get access to it. Okay, so here's what I'm going to give you today. My promise is I'm going to give you 3 entries that work in today's markets. I'm going to show you some examples. I'm going to briefly describe how to properly test those and kind of lay out a framework for developing your own strategies, because that's what's important. It's more than just the entries. But I'm going to give you all those things. I'm going to try to do it in about a half hour, and then that'll give us 15, 20 minutes or so for questions. There's always a ton of questions at these events. So I want to make sure I answer your questions, but for the YouTubers, it's only going to be about a half hour or so. And speaking of that, if you get a chance, go visit my YouTube channel. You can just go to YouTube and actually just type my name in the search box, Kevin Davey, and it will show up. If you subscribe, that'll help me make more videos. And what I'm going to do is when I hit 5,000 subs, I'm going to give everybody a free algo trading system. So, hey, it only takes a minute. Subscribe, and then you'll be notified of new videos too. So that's pretty cool. All right, so I couldn't show you outside because of the white balance, and it looked pretty bad. But just so everybody knows where I'm at, I'm in Ohio on the shores of Lake Erie at the point of that red dot you see. And this was actually a photo I just took about an hour ago. Big waves, heavy wind. The rain is now turning to snow. It was 38 degrees a couple hours ago, Fahrenheit. Now it's probably about 33, 34. There's some big flakes out there. So hopefully your weather is better than mine, because that's pretty nasty. But hey, that's Ohio in November, right? So I think next week they were saying we might get up to like 6 or 7 inches of snow. I'm like, that's no fun. So hopefully where you are, it's a little bit warmer. Okay, so our disclaimer, don't trade with money you can't afford to lose. Past performance is not indicative of future results. Hypothetical results are just that, hypothetical. And just be careful out there when you're trading. That's the big key. Okay, so most of you on this webinar know me. For those of you who don't, you just go to Amazon and look up trading books, and you'll find a bunch of my books have been or are currently bestsellers. My first book was Building Winning Algorithmic Trading Systems, then Intro to Algo Trading. That was #1. Currently, Exit and Entry Confessions of a Champion Trader is the #1 book in futures trading, and it's been that way for a couple months now. And then my latest book, Stock Market Investing for Everyone, it's just been released, and it actually hit #1 in a couple categories, not futures, obviously, since it's a stock book, but in a couple investment things. So that's some of my background. I've also created something I call the Strategy Factory Workshop. It's registered with the U.S. Patent Office. So it's a pretty unique type thing. It won Course of the Year a couple of years ago from the people at Trader Planet. And if you go to Trustpilot, you can see recent reviews and people leave some testimonials, and it's has an excellent review there. So that's the course I teach. People always say, well, hey, okay, you can trade, but can you actually teach people how to trade? Well, there's actually 6 trading contest winners that I've taught, consulted with, worked with, and students who've taken my workshop have created, right now we're at 313 strategies that have passed a 6-month live performance test in the Strategy Factory Club. So there's a lot of people creating good strategies using the techniques I kind of lay out. And I'm going to talk about some of those today. Obviously, I don't have time to talk about them all. I wish I did, but you get a taste of what I do. But so there's definitely people out there building good strategies with the method I use. And today we're going to talk about entries, but entries are only part of the puzzle. If you think about it, there's position sizing, there's money management and diversification. So I want to launch a poll and just see what everybody thinks. And you should see this on your screen of what you think the most important component is. Is it position sizing? Is it entries and exits? Is it psychology? Let's see what people say. And then, this also helps me because, hey, if I know what people are interested in, what they really think is important, then I can kind of tailor future free webinars to that. So we'll give you a couple more seconds here. And okay, yeah, it's pretty interesting results here. Okay, and so I'll share those with you now. And what you see is that money management, people were like, hey, that's #1. Close behind position sizing, diversification, and exit and entries. So that's all good stuff. And I think you guys see the key here. It's not just entries. Entries tend to be the most popular because everybody likes to talk about entries when they're getting in, but this is great. You guys see a lot of the other things that are important too. And obviously, I won't be talking about them all today. I do cover them in the workshop I run, but at least you guys are seeing more than just the entries. Okay, so let's hide that. And, a lot of traders, especially the ones just starting out, focus on entries. And that's bad. And You know, it's just not something you want to do. You don't want to focus just on entries. What you need to do is take those entries and then build a strategy. So here's how most people create strategies. You know, they take their inputs, their entries, their exits, and then they take a couple years of historical data, put it all together in their trading software, run an optimized back test. You know, they'll run thousands of iterations, maybe even millions. There's people who run millions. They get the best parameters and they start trading. So have another poll. Just want to see how many people do this type of thing. So compare what you're doing now with trading compared to this baseline. Is your approach more complicated than this? Is it less complicated? Is it pretty close to what you're doing, or you have no approach at all? And we'll wait a couple seconds and we'll see what people say here. Okay, so this is kind of interesting. And it's good because about a little more than a third of you are doing something more complicated than this. Okay, this is what the trading software teaches you like right off the bat. You know, hey, just insert a strategy and optimize it, you know, and that's what a lot of people do. So it's good to see a lot of you are doing something beyond that. 20% of you are doing something less complicated than that. Hopefully it's working out for you. And about 30% are doing this. And then 16% have no approach at all. So for those of you using this exact approach or with no approach, what I think is you shouldn't be doing that. If you're taking and you're optimizing and then you're immediately running live, you're probably going to be disappointed because running optimizations like that just don't work. You know, yeah, they look great with the back test and you get this nice looking equity curve, but it just doesn't work in real time. So some of the things I'll be sharing today will kind of might help you a little bit and give you some tips on that. Okay, so let's talk about entries. Now we kind of have a common baseline of strategy development, that kind of thing. All the entries, the 3 entries I'm going to give you today are from one of these 2 books. The book on the left, a lot of you probably already have. If you don't, just go to my website, look under free, sign up for it, you'll get it. In the book on the right, it's a couple dollars at Amazon, and there's a whole bunch of entries and exits there, but I just randomly picked some. Oh, and thanks, somebody said my poll's still up. There we go. Sorry about that. I'm trying to look at 2 screens at the same time and do this, and it gets a little overwhelming sometimes. So thank you for the people who did that, Derek and Robert and Al. Okay, so those are the books that these entries are going to be taken from. And with that, let's just kind of jump into it. Here's entry number 1. This is from the Confessions book. It's entry number 25. And what I did was I basically took that entry and just added a couple things. One, I made the length an optimized input, and I changed the default values of this, of the deviations and the length of for the momentum that you see here. And then I added a simple stop loss and a simple target. Pretty simple. So what this is it basically says when the price crosses over the lower Bollinger Band and the momentum is positive by the next bar, vice versa for going short. So I like to keep them symmetric if I can, which I usually do. And so that's it. Pretty simple. And I just chose daily bars of natural gas. How did I come up with that? I literally just opened a chart in Tradestation, and that's what popped up, because apparently I must have been working on natural gas like a few days before or something. That's what popped up. I'm just running a test over 2 years. So when I talk a little bit about my process, this is what I call a limited feasibility testing or preliminary testing. Just gives you an idea of what you're doing. Does it work or doesn't it work? And if it works, maybe it's a good strategy. You know, there's still more to do, which we'll talk about. But so here's just some of the sample results. Some sample trades are over on the left. And then what I did was I actually optimized over a 2-year period from 10 to looks like 40 bars for the one length. So one variable, I ran only 7 iterations. So right there, you should be picking up something that, wow, he doesn't really optimize too much. Yeah, I don't. I'm not running millions of iterations here. But the thing that's nice is 5 of the 7 are actually profitable. So it kind of shows a little bit of robustness that, hey, no matter what length I take, this is profitable. Now, again, read that second point. It says maybe there's something there. You know, if all these were negative, would anybody say it's a good system? Probably not. And you could say, well, hey, it's only over 2 years, but imagine trading something for 2 years where you're in a drawdown. That's not so good. So kind of what I use this test for is, whoops, looks like we've hit capacity of the webinar. So luckily, if you're in, you're in. Oh boy, I forgot to move the window for these things. So I apologize for that. But if you're here, try not to exit because chances are you won't be able to get back in with this, with it filling up like that. So this is saying, hey, it's worth some further evaluation, okay? And that's kind of the key. Here's some sample performance. There's not a whole lot of trades with this particular system, so you know, you could argue, wow, do you really have anything? Well, you know, I'm not saying to take this exactly and go start trading it. This is like a step in the process, but it does work in the current market. Now you have to kind of go and do some more testing to it. And over on the right, here's what it looks like over a 12-year test. Not bad, not great, but you know, at least it gives you a sense that without any optimizing, I just took actually not even the best case. So what I did here was I took this value of 15, which was the second best case. I never like taking the best case because usually the best case never works. But just to show you an example, I just took the second best case and see how that does. And it does pretty good. So, you know, it gives me some confidence that, hey, maybe there's something here, okay? So that's entry number 1. It's just a simple Bollinger Band. Here's entry number 2. This is from the 9 entries book. So this is from the free book. It's entry number 4. And the only thing I did here is I added a $5 per share profit target. And that's because I decided to test it on stocks because people always ask, well, hey, you do futures, does this work on stocks? I don't know. Well, yeah, it does. Some of the things are a little bit different, but I wanted to give you an example of, hey, this actually, you can use this approach with looking for stocks. So all this is just a simple breakout. You buy the next bar at the highest high of, you know, a certain number of bars back, and you sell short, vice versa. So again, it goes long and short, and it's symmetrical. Okay. And a $5 per share target, you're just going for some little profits. I don't have a stop loss there. You know, you could always add one. But for this particular case, I decided not to. And I just chose 60-minute Apple bars. I wanted a stock, so that's why I picked Apple. I just said, hey, let's pick Apple. I just chose 60 randomly, you know. There wasn't any real rhyme or reason to it. And again, I'm only showing you this over a 2-year period, the last 2 years, just to kind of give you a sense that, hey, okay, do breakouts still work, in the current market? And again, I look at a length. I ran this one from 10 to 50. So that gives you a wide range of results. And the neat thing is, hey, no matter what kind of breakout length you're looking at, it's profitable over that 2-year period. So again, it just gives you a sense that maybe there's something there. So this is an entry that works. Current market. Is it a system you want to trade? Well, you have to do some more to it, but it's a good start. And that's the real key. And again, here's the second best case performance. And again, I'm not trying to say, hey, this is what you're going to go trade. I'd be scared of if I saw a longer test with this kind of drawdown. That kind of scares me. Or maybe not even the amount, but the duration. You're going, looks like about 100 trades there. So that's a little scary, but you can see it's recovered and it's making some new highs, and over the 2-year period it looks good. So again, this is one that looks pretty good. It works in the current market. Now, I just did Apple 60-minute. Will it work with crude oil? I don't know. You'd have to test it. So not all these things work in every market because every market's kind of unique. But I suspect this would work with quite a few stocks. And you could say, well, hey, the reason it works is because it's a breakout and we've been in a bull market for a while. Well, yeah, but don't forget we've also had some nasty downturns in the past 2 years. 2018 there was, in January or so, there was a pretty nasty one, and then was it May of this year whenever the whole China trade deal thing was happening? That was pretty brutal too, a quick one. And it still held up, this breakout system. So again, it's pretty simple. My philosophy is simple usually works the best. Okay, so and I realize I'm kind of going through this quick, but I want to get these entries out there to you and not waste a lot of time just kind of rambling. Entry number 3 is actually the Confessions book, entry number 24. And the only thing I did here was I made the length an optimized input. So I wanted to optimize something, but you notice I'm not optimizing everything. I'm not optimizing the overbought and oversold. And this is with a function called money flow that's in Tradestation. And I've used this a few times on a few different things. It's kind of interesting. But if the money flow crosses above the oversold, you buy, vice versa, sell. There is no profit target here. There is no stop loss. Doesn't mean you can't have it, but this one's really the closest to just a pure entry. So it's a stop and reverse system. You're either long or short. You're going to be in the market all the time. But, you can always go in and add some exits later. That's kind of the way I look at it. Okay. So it's pretty simple again. This time I chose the mini S&P, and I specifically chose 4-hour bars because a lot of people like to use those. Now you could say, well, hey, what about if I try 3 hours and 59-minute bars, and then I'll be a minute or 2 or 3 ahead of everybody else as the day goes on. Hey, go for it. There's nothing written in stone that says you have to do a 4-hour bar or a 1-hour bar. Some platforms, like if you use MetaTrader 4, for example, they pretty much limit you that you can do 1 minute, 15 minute, 60 minute, 240 minute. I'm pretty sure MT5 allows you more flexibility with that, but this is just pretty popular, so that's why I took it. And again, I just tested it over the last 2 years. And maybe it's a good strategy if it works, okay? So again, I did this 10 to 50 thing with the length. You kind of see a lot of this is just me, how I develop systems. What I'm not doing 10 to 200 because then you're kind of getting in some different realms. As far as 10 to 50 is fairly short to medium term. If you get up to a length of 200 for some of these look back periods, no matter what you're doing, that's a long term, you know. With 4-hour bars, you know, that's months that you're talking about. So I like short to medium term. What you also don't see is I'm not doing 2 to 10 bars where I'm doing super short term. You know, you might want to try it with that. It doesn't mean it won't work. I just kind of, this is just my experience. I tend to go with this medium length, and 10 to 50 is a pretty good medium length. And you notice I'm using that pretty much on all 3 of these entries, even though I'm using daily bars, 4-hour bars, and 60-minute bars. So that's just kind of how I set it up. And again, 5 of the 7, or there might be 8 there, or 9, I don't know. Most of them are profitable. And again, it's not going to tell you, oh, hey, go out and trade this immediately. But what it's going to tell you is, hey, maybe you have something that's kind of robust, right? I mean, we've all seen optimizations where 50 would be the only profitable and everything else loses money. And you're like, oh yeah, but what if the 50 is like the holy grail and maybe I should trade it? You know, this is saying, hey, you don't have to be exact with it. You can be off a little bit and still do okay. And that's important when you build systems. You know, you want things that are more robust. Okay, so it's kind of worth some extra test and evaluation. Again, not so many trades here on a 2-year period, and even on a 12-year period, not so many. And yeah, it's not the greatest, but the point is it's an entry and it's working in the current market. It's making money. And that's kind of why I wanted to show it. So the point with all these entries is they're all kind of working today. They're all kind of doing some different things. The big key is you just got to kind of search around and find what you're looking for here. So the key here is more testing is required. And before I launch that, I got another poll for you guys. Okay. Let's just see. So you've seen these 3 entries. What would be your next step? Now that you see these entries and you know, okay, well, hey, Kevin's done some testing and it looks like they work good the past couple of years. Should I start trading them? Should I just watch them? Should I do some more testing? Should I test on some other markets? And, you know, I kind of want to slide ahead. So I kind of gave you guys the answers. So I'm not going to keep this one up too long. That, and I know you guys are pretty smart. If you've been following me for any length of time, you know, you already know quite a bit. And of course, you're going to perform more testing. Thank goodness no one said they're going to start trading these right off the bat. Yeah, they work, but, you know, newbies, people brand new to this, they would start trading it. So, you know, give yourself a little pat on the back if you say, I'm not going to trade that. I need to do some more evaluation. Well, what kind of evaluation do you need to do? Well, a 2-year test is nice, but some of the things I like to test if my entry actually has an edge. There's a certain test I run that I teach. You can test some different exits, so try it with some different exits. You do walk forward testing, Monte Carlo testing, live evaluation. Then you do some correlation testing. You know, you want to make sure if you have some other strategies that it connects with the other ones where it doesn't just improve your risk, or not improve your risk, increase your risk. You know, you want to improve your diversification. So there's definitely more testing you got to do before you start trading. Okay, so it kind of leads me to an ideal trading process. Okay, so you get your entries, and hey, in those books, there's a whole bunch of them. Then you build a strategy around it. You test it, you evaluate it, you do your analysis. Then if it works, you go and automate it. And if you have enough strategies, you actually create a trading business. So take a look at that. And then I'm going to ask the question of, where do you guys think you're at in this? Are you stuck at the entry phase? Are you stuck at the creating strategies phase? Or, hey, you got that trading business going? Where are you at? Because I'm just kind of curious, because I have some statistics to show you in a second of just based on people I've talked to, where people normally are. And so I just kind of want to see where people are. And we'll give you like another 5 seconds, 10 seconds to answer it. Okay. And it's kind of what I expected, and you'll see that in a second. Most of you are stuck in the creating strategies type thing and in the testing and evaluation phase. So almost more than 2/3 of you are stuck there. It's not getting to automation. It's not creating a business. And then third is getting entries. So that's pretty common. And I'll show you, most people know how to get the entries, right? Everybody's doing that. Kind of what the poll shows too, maybe 50 to 70% of the people can create strategies. That's where a lot of people get stuck. And then the test and evaluation, that's where almost everybody drops off. And that's exactly what we saw in this poll you just took, where less than 20% of you get beyond this point. Most people, I'm going to say less than 10% of people test and evaluate a strategy correctly. Most people mess up. This is where you get seduced by that great back test, and you have to remember, oh, past performance is not indicative of future results, but boy, that equity curve looks great, that back test looks great. That's where most people get hung up. And then most people don't get to the automate strategies or trading business. And the poll shows a little bit higher numbers than what I'm showing, but you kind of get the point. Most people get stuck with creating strategies and also testing and evaluation. And that's kind of what I help with. It's all about the process, right? The entries, hey, they're good to have. It's good to have a list of them ready to test, but it's really that process of building the strategy and then testing it. And that's the true key to success. So if you want to be successful at it, you got to get those 2 points in line. So how do you do that? Well, here's how I do it. And this is the exact process I teach in my workshop. Now, obviously, I can't go through all the details on it, but where we were kind of today, we didn't talk about goals. We just jumped into ideas. So I got ideas from those books, right? And then I kind of jumped to this limited feasibility testing just to see if some of these entries were working today. So if you'd really do it, then you'd go on to walk forward testing, Monte Carlo simulation, incubation, diversification, a lot of other steps, a lot of other tests before you got to real money operation where you're actually risking real money. So that's kind of my process. Does it work? Well, hey, I mentioned the 6 trophy winners. I mentioned the 313 strategies that's growing every month because people are participating in this strategy factory club. That's part of the workshop. And, I just put a number down, my own personal strategies. I probably have a ton more than that, but it does work. Now, do you need that to build your own successful, quote unquote, factory or your own process? No. And I'm going to tell you how to do it if you're going to do it on your own. You can surely develop them on your own. Here's what you do. You start out, you develop, I would say 50 to 100 strategies, okay? And you want them to do it with the same approach because you want to get some statistics on it, right? Just building one strategy, if it fails, it doesn't mean your approach is bad, right? You want to get a big number so you can evaluate. So 50 to 100 is a good number. Watch those in real time, see how they do. Would they have made money? And then if they're good, hey, now you got a process. But if they're not good, if the results are not good, then you go back, adjust your process, create another 50 or so strategies with the new process, then watch that for a couple of years, okay? And the reason I say a couple of years is because that's kind of simulating live trading, right? You don't want to be having something that works for a week and then falls apart. You want to evaluate it over a longer period of time. So you keep going through that, and eventually you're going to give up or you're going to find a process that's profitable. So, I have a way of doing it, and it's the way I teach, and you can see it's worked for other people, but hey, I'm not saying you can't do it yourself. You definitely can, but if you're going to do it and you're going to do it right, follow the steps that I have in purple, because that really will give you a statistically sound approach that you can say, hey, I created 50 strategies in it and they work. On average, they work. This is good. I'm going to start going live with it. But expect to spend a couple of years with it, because that's what I definitely did when I built what I do. I didn't start out doing this. I kind of fumbled my way, is probably a good word, fumbled my way around doing this. So that's a way to do it. And with that, I'm going to have one more poll, and so let's just compare them. So you kind of understand my approach, and the purple is kind of your own approach. What do you think might be better? As far as time and money, realize the time is going to be the time you're going to spend developing your own process versus the time you'd spend developing strategies with my process. And the money is going to be, obviously, the workshop isn't free. So there's that. And then the money on developing your own is probably losing money in the markets, which is what I did for a long time as I developed my process. And, the results, most people say, hey, take an approach that already works and then try using that. And that's a good one. Now, there are people who use my approach and then they go and they add their little nuances to it. And what I tell them is, as long as you prove it in real time, then go for it. So, and I apologize if you can hear that saw. Literally, these people have this big saw and they're cutting into a brick wall, right 5 feet away. And Chris says, no, he can't hear it. So thankfully, picked the wrong day to have this webinar. It's kind of, oh boy. Well, anyways, so that's kind of where you're at. So kind of want to just sum up. Today I showed you 3 entries. They all work in the current market. I just showed you some examples you'd have to test. But you can use those entries to create your own strategies. Just make sure you have a good development approach with it. That's the key. That is really the key. Okay, so thanks for watching. If you are watching this live or you registered for it, just stay tuned, because we're going to do the special offer, the Q&A, and the autographed book giveaway. if you're watching this on YouTube, I'm going to end in about 2 seconds. Thanks for watching, and happy trading.